Thanks very much, guys. So I guess with the evolution of stablecoins, with the introduction of Facebook's Libra, first, can you inform our audience exactly what a stablecoin is, just so everyone's on the same page? George?
Sure. So we've got two types of stablecoins in the market at the moment. You've got trusted and you've got trustless stablecoins. So a trusted stablecoin is where you have some sort of counterparty that's backing the collateral. So for example, if you are somebody like a Tether, you say that, hey, for every $1 that you deposit into our bank account, we'll give you 1 Tether. And if you give them 1 Tether coin, then they're meant to give you $1. So essentially, that's a trusted sort of entity. There's a bank involved, there's a single company, there's maybe a custodian or whatever, and you just have to trust that they're good for the money or not. The other type of stablecoin is trustless, and this is probably most prominent in MakerDAO, although it was first pioneered with BitShares and BitUSD back in the day. But MakerDAO is essentially, it's a smart contract, and instead of having to rely on some random company that exists somewhere in the world and has a bank account, you back it with crypto. And the crypto is on the blockchain and it's public for everybody to see. So if you want to create a DAI stablecoin, which is the US dollar trustless stablecoin on Ethereum, you back it with Ethereum. So in that case, you don't have to trust a bank. Everybody can see the smart contract. You can see that they're good for the money or not. And fundamentally, I think that's a better system. And it's also more scalable to all these different other currencies, which is what I'm most interested in. But they're the two different types of stablecoins that we got.
So, Do, I guess, why does the crypto markets love stablecoins at this point? Is it a way to avoid price risk? Are we looking to increase liquidity, attracting new investment?
Yeah, so what I noticed is the market starts to favor stablecoins during bear markets because I think the idea is while the price of other cryptocurrencies are crashing, stablecoins don't have that property. So I think from a speculator's perspective, they enjoy that. I like to think, though, that stablecoins hold a lot of promise for being adopted for a lot of use cases in a way that volatile cryptocurrencies can't.
Right.
So I think that's one of the reasons why.
So remittance and that type of thing, cross-border payments.
Exactly.
Yeah. Okay. George, do you have anything to add to that?
I have lots to add to that.
Sure, go ahead.
I literally wrote a book on cryptocurrency remittances. So we were literally the first company in the world to use crypto to remit money. It was about 5.5 years ago now. If you Google crypto remittances, you'll probably see Bitspark there. But essentially, for probably about 4 of those, almost 6 years now, we've been using Bitcoin as the means of transmission, because that's literally the only way that you can really send money. And most of the other crypto remittance companies, they all use Bitcoin. Now, everybody will get up here and they'll go, oh, yeah, but there's a different coin and it's faster and whatever. Yeah, okay, but you can't actually sell it for the local fiat at the other end. So one really important thing is that what stablecoins do is, if you're using something which has a floating market price like a Bitcoin, yes, there's liquidity. Often we have customers that might come to us from, let's say, Sri Lanka or something like that, right? Great, big remittance country, there's a couple $1 billion going there every year. If I send Bitcoin there, there's literally nowhere I can liquidate that for rupee. There's no exchange, there's no custodian, there's nothing. And there's 180 currencies in the world. So I'm less interested in like 20 EU countries and the US dollar. What about the other 150? Because that's actually the places that people send money. Right. And I think stablecoins in those places are super important, because if you have a stablecoin for a rupee, you can buy that stablecoin. And instead of having to rely on sort of the local liquidities in that markets, if it's something like a trusted stablecoin, like in the case of MakerDAO with their DAI stablecoin, you can issue that anywhere in the world. So the big difference here is that because it's global in terms of who can create it and who can issue it, it means that anybody, I can sit here in Singapore and I can make a Sri Lankan rupee stablecoin. So therefore, if I'm a company that needs to buy this rupee coin, I'm not reliant on the local infrastructure in Sri Lanka. I actually don't care about the crypto markets there, if it's big, if it's not, whatever. The point is, I'm a company who wants to buy that rupee coin. I can do that from anywhere in the world. I'm providing the buy-side liquidity. And if you're somebody who sees a value in order to do that, maybe you can create it with some Ethereum and then you can sell it to me for a profit, then you can do that. So I think one of the cool things about stablecoins is being able to be this flexible in all of these other different currencies. And whether that's trusted or trustless, I think ultimately trustless is where we're going towards, because they're just better and more scalable, and you can spin them up, like click your fingers and make a new one.
So they're reducing barriers of entry into the market, essentially.
Correct, yeah, because fundamentally, if you want to get into the market, often what happens now in the OTC brokers in Hong Kong, pretty much everybody doesn't do like USD or HKD direct. They go, HKD Tether. We do that, USD Tether or something like that. And then once you're in Tether, then you can do whatever from there. You can buy Bitcoin, you can buy some other stablecoin. It's just a lot easier, and also there's less pricing risk, so the prices are actually better.
Yeah.
Often margins, if you're an OTC broker for Bitcoin, is higher. If it's a stablecoin, it's less because it's less volatile, so it makes sense.
Right, okay. Doe, I guess I'll move this on. With the likes of Binance's US dollar-backed stablecoin entering the fold, and we've also got Libra teetering on the edges there, regulation permitting. Do you feel as though the space is becoming more and more crowded? Is this leading to a confusing array of choice for clients and investors? Or do you think more choice increases, more options for traders?
Yeah, so I don't really think so, because I think most stablecoins are sort of focused on speculative trading use cases. So to touch on a little bit on what George said, yeah, it's great. If you have a stablecoin, it's stable and whatever, but to be honest, if you don't really have great redeemability options, if you don't have great fiat off-ramps, on-ramps, then it doesn't really matter, right? Then it's just a hypothetical price exposure asset, right? So I think what's really interesting about Bitcoin is that you're absolutely right. You do need liquidity options in almost every single currency pair for this to be used in the use case of remittances. But with stablecoins, if you wanted to build in like a remittance option, then you need to build in that infrastructure in every country in which you want to operate. Right. So I think it's a lot more sort of closer to application, if you will. I think in the actual use case of retail payments and something that can reach like end users, not something that can for traders to dump a couple $100K here and there. I think like the market is actually not crowded at all. Right, like even Maker right now, it's only being used to margin long ETH and a couple of other things, right? Which is, in my opinion, not.
So there's not exactly a stablecoin war going on exactly, more so that they're just trying to push their product out, as opposed to
I think there is
vying for greater market share.
Well, I think there is saturation with USD stablecoins.
Right. Like
converting crypto to a USD is a solved problem. We don't need that.
That's
it's not interesting anymore. Have crypto to some other currency which doesn't have that viability, and then do it in a way where you can do it cash in, cash out, maybe at all the different remittance shops. That's what we do. Therefore, you don't need banks. So often the problem with stablecoin issuers is, who's going to bank me? Oh, I'm going to go to this country and try and get a bank account. Good luck. They're never going to give you one. So therefore, probably the best thing is to use the existing cash infrastructure of the places that already exist, and they're the locations where you can get cash in and cash out of the system.
Okay. I want to touch quickly on Tether a bit. What's your opinions on Tether? Doe, you want to start?
I mean, it's bullshit, right? So you just print a lot of like arbitrary currency, and when the FBI investigates you, you just equivocate and shuffle your feet like a bunch of legalese. There's probably lots of better versions of Tether that came out since then, like Circle, True USD, and things like that.
Right.
In my opinion, are truly superior to Tether in almost every single way. But it seems like there's been FUD about Tether for a while now, but it seems like the market has sort of absorbed the reality that Tether is going to be a fractional stablecoin. So,
George?
I have no beef against Tether. Essentially, we've been at the same bank as Tether was since they started. And that bank was actually kept on the down low from pretty much everyone in the industry, but many of the crypto exchanges here also had an account. It was with Crypto Capital. And Crypto Capital, they were a proxy of a proxy, and basically they were the only bank that would bank crypto companies. So we had a bank with them, so did a lot of other exchanges. But in the case of Tether, what happens was that Crypto Capital's proxy got the money seized, and everyone was like, oh, this is fake. They're trying to do some shadowy business with the money. It's like, no, like we actually also are not able to use our Crypto Capital account anymore. So I'm pretty sure that I know for a fact that the same happened to them. So, and then so they got the 800 million seized, and then they raised a 1 billion IEO, and so now they're good again. So, I mean, yeah, probably. Will any auditor actually sign off on Tether's accounts? No. Is there a reason for that? I mean, Tether's probably pretty risky for an auditor if you're going to put your name to it, so there's probably that. I'm sure there are people out there who would do it, but I don't think, they don't really care. I mean, the market speaks for itself, right? The market cap's $4 billion. Everyone else, the closest they can get is 250 million. So if people really did value that Tether was useless and everything else, we would see that, I think, reflected in the market cap. But at the moment, I think, Bitfinex is sort of doing a good job, and Tether's still around. And maybe it's not really fully backed, who knows? But I think the fact is that will be reflected in the price, and it hasn't been reflected in the price yet.
All right, so we got some mixed opinions on Tether. That's interesting. I also want to just move forward in terms of USDC and PAX. They're now offering 6.5% interest simply from holding. Thoughts on this, boys? Joe?
I mean, I don't know where that comes from, right? So for DeFi, there's like platforms that claim to give out 8% annual returns.
Yeah,
there are platforms that claim
up to
12%.
8%.
So it's like absolutely insane, right? So I think that works for limited use cases where there's got to be somebody who's providing all of that interest, right? And I don't think it's like a healthy market dynamic if you can have a risk-free 12% annualized return. That is absolutely insane. So it's going to come down, right?
Right, George?
I think that, so a lot of the DeFi protocols, I think they're super interesting because it gives you a reason to hold a stablecoin. Because if you can get 10% interest in a DeFi protocol, which, I mean, I use in a personal capacity some of these DeFi protocols, and it's like, yeah, I get 5x the amount of interest yearly than I would at a bank, maybe 6x. And okay, so I understand that, having a smart contract on Ethereum. Then there's also the lending, which are more centralized. So Bitfinex has been doing lending since forever. I was in their original beta in 2012, and back then they had maybe, I don't know, a couple $100K on the lending books. I put some money in, and for about two to 3 weeks, I was earning 8.5% a day in USD.
Wow.
And that's when the Bitcoin price was maybe like, I don't know, $100 or something like that, or maybe less. But the reason for that, and it was legit, is because that was actually reflected by the market demand, because people wanted USD because then they could go long Bitcoin. So they would be willing to pay you a ridiculous exchange rate because they knew the Bitcoin price was pumping so much. So if you're lending USD, essentially you're like, yeah, sure, I can lend USD all day long. I can get 8.5% a day. And people are willing to pay that because they think the Bitcoin price is going to go up even more. So I think those kind of more centralized mechanisms, they're pretty established. They have a long track record. It's literally years. So I'm less concerned about them. The DeFi stuff, it's still sort of, what if the smart contract gets hacked or something like that? Bitfinex has been hacked 3 times, and they've come back and they've all been good with it. So I'm actually more supportive of Bitfinex than I am the DeFi products, even though they're like, open source and so on.
Just jumping through topics here, and I want to touch on global trends. What are some of the global trends you're seeing with stablecoins? What's the sentiment towards them in 2019 versus 2018 and 2017? Do you want to start?
Yeah, so I think in 2017, algorithmic stablecoins were super hot. So you had MakerDAO coming out with a $30 million raise. And then they subsequently raised further from like Polychain and Jason Horowitz and things like that. So I think they've made a lot of progress, sort of socializing the concept of algorithmic stablecoins. And then we had something else called Basecoin, which was also sucking in a lot of capital from the market and a lot of like follow-on products that came on after that. But I think like the market appetite sort of died because back in the day when Tether was sort of like a new concept, everybody was attacking it saying, how can you trust Bitfinex? How can you trust like the Tether company to not do anything with their money? But as like time passed and like a lot of FUD was sort of digested by the market, people sort of thought, okay, well the price is holding, so it seems sketch, but what the hell?
Yeah.
Right.
George, do you want to add anything to that? I mean, what's your view on the global trends? Is it sort of dying off, like they were saying, in terms of the interest now, especially with price being a lot lower than it was in 2017? There's a lot less market activity. Is that just a result of the natural trend, or do you think? Do you see anything else?
Yeah, not so much. I mean, so as I said before, it's the primary thing which OTC dealers now use in Hong Kong, right? So it's kind of like a proxy bank as well. So we pay suppliers in stablecoins, we pay salaries in stablecoins.
So that's driving demand?
Well, we have to acquire those stablecoins at some stage in order to pay people salaries in them. So it's kind of like people do it for a store of value, and it's better than a bank account because you're never going to get shut down. So I think that as a sort of proxy bank account, of which, yeah, maybe you can lend it, make some money. Maybe you can go and trade it, make some money, turn it over a couple of times. I think that, yeah, probably the future is stablecoins being more useful as that onboarding mechanism. And I mean, we're seeing this in OTC already. I think we're just going to continue to see that maybe in new currencies as well.
Right, okay. Do, with the Terra protocol, you coming up with a stablecoin in Terra, what's the differences there?
Yeah.
Terra stablecoin.
Yeah,
versus,
so we're actually not
currently
just
available.
one stablecoin. So Terra is a family of stablecoins that each pegged to different fiat currencies. So we have something that is pegged to the Korean won. We have something that's pegged to the Singapore dollar. We have something that's pegged to the IMF SDR. And then the USD as well. So basically, the primary difference between Terra and lots of other USD-backed stablecoins is that the use case is geared towards retail payments and sort of fintech lines of business. So we are integrating with a lot of e-commerce merchants in Korea right now. So that's doing some meaningful volume And then so the stablecoin is used as a settlement mechanism to power the payments network, if you will. So we sort of stayed away from margin products and other trading-based derivatives and things like that.
Do you think stablecoins are here to stay, George?
Yeah, of course. I mean, there's nothing preventing anyone from making new stablecoins. So that's never going to go away. There's still going to be the ability for somebody to sit in their basement somewhere in the world and go click their fingers and make a new stablecoin. So that doesn't matter what really happens, that will still be a thing. The question is maybe what kind of traction are they going to get? Maybe there's more stablecoins which will be pegged to different interesting stuff. Maybe it's commodities, something like that. Or maybe it's something along those lines, I think. And currencies, I think, is the first use case. So I think they're here to stay. What incarnation they will be in a couple of years from now, who knows? But I think the idea is that it's kind of like a much easier proxy for the traditional financial system. Because if you have a stablecoin pegged to the current Chicago Mercantile Exchange wheat price, then what's easier for you to go and buy, take a position in wheat if you think it's going to go up? You're going to get a brokerage account, you're going to pass 2 weeks of different documentation, several bank accounts, blah, blah, all of this nonsense. Or you could download a wallet app and just press a button and get done and just buy it.
So what I'm hearing essentially is accessibility is going to be the main driver of stablecoins because private retail investors can simply opt in and that's going to increase its demand in the future. Do you agree with that sentiment?
Yeah, I do think that the field of sort of collateralized USD-backed stablecoins are going to be whittled down a bit, right? I think some of them will die, and then it's probably going to calibrate towards a few market leaders because it just makes sense to have consolidation in that market. I think we're going to see a lot of sort of consortium currencies that are price stable in value, but are used in a lot of different applications. So I mean, Terra is a consortium currency like that is price stable, and it's sort of like a currency that a bunch of e-commerce companies and retailers agreed to use. And I think we're going to see more of that in government. We're going to see more of that in cross-border transactions and remittances and lots of different applications.
So you mentioned remittances and cross-border payments. I guess what other applications do you see stablecoins delving into the future? I mean, is this something that we can use as a national currency, perhaps, like what China is doing, but more of an offshoot to that? Is this a trend?
Yeah, so I mean, like sort of central bank issued stablecoins is definitely like one of those trends. I think when I say consortium-based currency is like a really interesting application is loyalty points. So in loyalty points, like prior to blockchain, it wasn't really possible to have consortium-based currencies, right?
Right.
Because if you had multiple parties like agree that anybody can issue like their own points and it has to be redeemable across all the parties, and it doesn't work because it falls under the tragedy of the commons.
Okay.
But it is interesting if you have a transparent ledger and all the parties agree to a common issuance system and a common way of distributing the gains from that point system, then it starts to become really interesting because you can have, basically, the Star Alliance on steroids, if you will.
Yeah. George?
Central bank digital currencies. So I remember a couple of years ago being in a room, I was invited by the IMF to talk to a bunch of central bankers, and I was telling them about this. I'm like, this is fundamental. This is going to be what you're going to do like as soon as possible. And all of them were like, we're never going to do that. Really, the thing is that it just makes sense on so many levels. So why is China doing it? Why would any central bank want to do it? Because they get more control. They can implement their monetary policy much easier, and they have full access in real time to everything that is happening in the financial system. Currently, I remember talking to another startup. They help file reports for banks and so on. In this particular jurisdiction, each bank had to file 150 different types of reports with the regulator every quarter. And that was usually in the form of like physical PDFs, like pieces of paper, which they would send in, or like spreadsheets and all of this terrible data. And the regulator just employed people to just sort of go through it, real manual kind of work. And that sucks. And the reason for that is there's no standard system for any of that information to be collected, documented, seen in real time, all this kind of stuff. So it totally makes sense for the central bank to go, look, we're going to make our new stablecoin. It's going to be basically just a digital version on a better system than what we currently have because digital currencies already exist. The central bank databases are already digital currencies, already stablecoins, but the actual infrastructure is not available for every counterpart to be able to access in the same way. So I think that why is China doing it? because they want to have more control over everything. Is it going to mean anything to consumer? Absolutely not, because what's going to happen is the China Central Bank is going to say, well, we regulate banks, so what we're going to do is we're going to give access to all the different banks that we regulate, so the banks will get access to it. And then the banks will say, we are using blockchain technology, and it's great. And the consumer will be like, I'm logging into my bank app, I see absolutely no change to anything. So I don't see that it will affect the consumer that much, but certainly from the central bank side, they will be able to know, HSBC, what is your exposure at this point in time to derivatives of this particular product? Because they own the currencies, so they'll be able to see where that currency actually lives. So yeah, I think it probably makes sense for central banks, but probably doesn't have any impact on consumers.
Okay, I think that pretty much concludes the discussion. I'd like to thank the panelists for today. Thank you very much. And yeah, thanks guys.
Thank you very much. Thank you.